All right, welcome everyone to our first stream of March. This week in crypto, Maksim should be joining here in a bit as well. I'm your host, Brian. Thank you so much for joining. It's been a strange week, to say the least. We spent so yes, that's a big deal. When we see this huge drop off, especially in a very short time frame, it's usually the sign of some whales that are uh, moving tokens and potentially selling to exchanges, something like that. It's very hard to move a market cap worth trillions, not trillions, but billions of dollars that quickly unless there is a very large address or a group of large addresses that are behind it. Regardless, we will be looking into some of the whale activity and where it stands now after all the dust has settled following that big shift about 10 hours ago. We have Bitcoin here down 6%. It felt like more for a little while. I think we were in the low 22Ks for a little while. But as of now, it's only down about 5.6% in the past week, which is still substantial and not fun to see. But compared to a lot of the altcoins over here, it could be worse, right? The majority of them here in the top 100 are down double digits. You can see Cardano down 11%, Matic 11, Polkadot 12, Avalanche 14. The biggest loser, it looks like, was a tie between Filecoin and Clayton at minus 19% respectively. And then you can see the one big outlier here was TMG. And let's take a look at TMG for a minute. We don't have ERC20 based data because it's not an ERC20 asset. So we're a little limited in what we can look at, but just check out the absolute staggering ascension that it's had since late January, sitting at about 34 cents on January 27th, hitting a 800% rise on February 26th, a month later, and it's still up 466% after the inevitable correction that occurred. And, looking at trading volume too, and we can add social volume in there as well. It's pretty clear that, the volume has dried up. It's gone back to normal. Artificial pump, almost certainly, right? But it doesn't mean that it can't make another run. If you want something truly volatile right now, it's TMG, to say the least. But there's obviously a lot of factors that go into any assets pump, and I think that we may have an article that comes out about it in the near future. Hex up 13%. Maker, also a big story at plus 26%. So congrats if you were in Maker prior to the dip, of course, because all assets were up a lot more prior to Bitcoin's sudden 5% drop. Also take a look at the social volume here. Bitcoin and Ethereum being discussed substantially less in the last week compared to the week before, whereas stablecoins are an interesting story. Binance has obviously been in the news quite a bit, and BUSD continues to fluctuate pretty wildly. We put a story out about it just yesterday. If I can find it, it's our news feed. Here's our profile. So check this out. Whales are flip-flopping their stablecoins over the past, give or take 3 weeks or so, particularly in that medium shark size all the way up to large whale size of actual human traders that hold about $100,000 to $100 million in stablecoins. You can see right here, this is when the SEC news came out and everyone panicked, said, I don't want to have any BUSD anymore. They dropped substantially. Note that the amount is much less anyways, even before, like the amount that whales were holding, like it was peaking a little above 11%, got down to about 7%, jumped back up to about 10, and is now sitting at about 8.5%. Meanwhile, you can see that the USDC axis is much different. It was actually up to about 64%. So these 100K to 100 million address holders, they were actually holding about 2/3, just under 2/3 of the supply, but they've now dropped substantially down to 59%. And it's interesting seeing how these two zigzag. It's almost kind of working like an indicator based on the level of fear people have that Binance in general or BUSD or Paxos are in trouble right now. And with it going high, that's people kind of easing back into it, thinking this lawsuit was a little overblown. And then when it drops, people are suddenly getting worried by the latest news development. So I find that fascinating, and it's something to keep an eye on. Someone here, Jeff, pointed out that this is why USDT is more popular than both. I mean, arguably, it is more popular than both. Undoubtedly, we can see that just by looking at its overall market cap compared to the other two. But let's take a look at Tether really quick. In fact, no, this is even better. Let's look at this chart that I was already going to show. A lot of different lines here. This is the amount of Bitcoin held by shark and whale addresses. Red is Tether, blue is USD coin, orange is BUSD, and yellow is DAI. So Tether's the key here. It's up to about 34.7% held when it comes to those key $100,000 to $10 million addresses. Let me zoom out here just to give some extra perspective. This is the past year. And check out the recovery. Tether was just falling off a cliff as buying power was evaporating, as Bitcoin was going down. There's debate even among me and Maksim and other Santiment members and just the crypto analysts out there in general as to what it means when both Tether and Bitcoin are going down together in terms of whale specific types of sized addresses. My belief is that a lot was just being transferred to fiat here. And generally when both stablecoins and Bitcoin are going down together, it's a concern, right? And it generally leads to prices going down. That most analysts agree upon. The reason is a little more hazy. However, beginning in early August, that's when at least Tether started to bottom out in terms of whale holdings. Yes, prices still went down all the way until November, but you can see right about here, mid-December, just about 3 months ago, that's when we started to see some serious accumulation in buying power, not just for Tether, but also for BUSD. You know, DAI was moving upwards. USD coin was kind of topping at that point, which is interesting. But Tether, the number one stablecoin in crypto, according to market cap, it's now back up to almost 35% and almost right back to where it started before after the first plummet, but before the huge drop in buying power among whales with the largest stablecoin in crypto. So I think this is really interesting, and it shows that even though Bitcoin's whales are showing some red flags here, I don't like to see that we're moving down, especially just since the 26th. So basically the last week or so, 5 days or so, we've gone down a minor amount. It looks like they have dropped 0.34% of their holdings, which may not sound like much, but 0.34% of a group that is holding 2/3 of all of crypto, almost exactly 66.78%, 2/3. That's a huge, huge deduction, and something we have to be a little concerned about. They're officially lower, 66.78 compared to 66.79. Technically, they are lower than this bottom that they hit on November 21st. Super concerning. We want, their supply trajectory to be going a little bit up like this, which was happening right before the big ascension in early to mid-January. So now that we're below, we can actually zoom out and say, all right, since 2018, when's the last time they were this low? And yeah, it was October of 2018, the last time the addresses holding anywhere between 10 to 10,000 Bitcoin were holding this low of a ratio of the overall supply. So that means smaller addresses are holding a larger amount. And typically when the small ones are holding the bags, it's not good for an asset. Now, it isn't, saying that the small holders are now holding the bag for Bitcoin, that's disingenuous at best. It's not true, because we can see clearly that they're still holding 2/3 of the supply. But if it continues to move down in this direction, we have to be a little concerned. You can clearly see that when directions are moving up, prices go up. When the direction of whale bags are going down, price tends to go down. So right now, if we had to define this kind of short/midterm trend, the lines probably aren't even necessary here, but just to illustrate it, we've got price going this way and whales going this way. That's a bearish divergence. And we don't want to see that. We want to see, at least a neutral price performance if whales are going down. But instead, it kind of peaked right after that first leg up in price, and then price kept going up as whales were dumping. So it's just something to keep in mind. Zooming back in one more time, because I wanted to, point out what's going on with BUSD and USDC. Check out the blue line there, beginning right here in mid-February, about 3 weeks ago. And then at the same time, BUSD is doing the opposite. So they're showing some inverse correlation to each other. I think in general, it's a little more important to see USDC staying up than BUSD, because USDC is the larger market cap. And, like I said, BUSD, they're only holding, these sharks and whales, 5.88% of supply, whereas USDC coin, when this line goes down, it's a much bigger drop because they hold 36.09%. So more negative than positive right now. It's not great to see. One might argue this was kind of a warning for the inevitable drop that we saw yesterday, but there's always a variety of reasons, and it wouldn't be fair to just point to one and say that's why. While we're here, we can also check out that Ethereum is moving down pretty quickly as well, with its, small sharks holding 100 Ethereum all the way up to its largest sharks holding about 1 million. Anything above 1 million, it's most. Please.
But Brian, I think in Ethereum it's a bit different story. We should at the same time plot over increase of staking contract. It's very possible people are moving, those who having between 110 or like million Ethereum, so they're moving into staking contract.
Yeah, I totally agree with that.
You can see it. Actually, we have even though old dashboard. Go to our dashboard.
What's it called?
Top left. I think it's called Ethereum to staken. It's outdated. We are revoking it, but still, it will show the point. Ethereum to staken. Yeah, it's all there. It was there.
It's got it. Ethereum staking. Oh, got it.
So you will see that it's constant. So total staked. You see this number on pink or brown? Yes. So both amount of addresses and amount staked keep climbing up.
And especially here, look at just about 10 days ago, big jump.
Yeah, because of Shanghai now, more or less, it kind of officially will be rolling out very soon. So the risks are limited of being stuck. Why not? I mean, nowadays, 4% API, it's, it's not 2021 anymore. So 4% is 4%.
Absolutely. And that's still a good staking ROI, but certainly not the kind of numbers that we were seeing during the bull run. I like this too. Centralized exchange trader, 714.7 thousand. So they're making up, just eyeballing it, looking like about a little under 2/3 of the overall staking. And then we have the unlabeled here. What would be an example of unlabeled? Would that be something like Curve, for example?
Could be, yeah, could be. As I said, it's a bit outdated dashboard. We will be rolling out a new one. But just to have, it still provides a good overview. And you can always say, actually, you can pick up, I think, most of the addresses, staking addresses, be it Lido or Rocket Pool or everything, it will be 100,000 above. If you just take a group of addresses 100,000 above, I guess they will be increasing their balances.
Let's check it
I
out.
might be wrong, but it's my assumption.
And welcome, by the way. I didn't even know you were on the call. And
Yes, I came very quietly.
You sneaked
And
up
by
on
the
us.
yes, Brian or Max, I trying to use also in this environment my new way of speaking. Is the quality now better? Max,
Yeah, you sound good to me. I mean, you never sounded super muffled before, but I can hear a slight improvement. Chat, let us know what you think yourselves too.
Okay.
But yeah, so you're talking about 100,000 to 1 million here?
Yes.
So yeah, I mean, it doesn't look like they're budging much. If I go down one notch, it does look a little better, the 10,000 to 100,000, which are still very large. Those are millionaire addresses.
Okay.
So yeah, I mean, we could even combine them really quick, see if that makes any difference. So 10,000 to 1 million, here's how it looks. It's hard to tell if there's much of a correlation, but yeah, I mean, they were moving up till about 2 weeks after the FTX collapse. That's where they topped. And they were actually going down during the big run in January, which is interesting. And now they're kind of flat. But yeah, I will put a few more notes on Ethereum later in this call. I want to look into it a little more, and that's why I used their logo in the thumbnail, because they're sitting in, what was it, 1,580 or something right now. They dropped down to below 1,550 yesterday during the drop, and now they're recovering a little bit, along with a lot of altcoins. But Ethereum is going to be the dictator for a lot of other assets. Obviously, ERC20s are going to do or die based on how Ethereum holds up here. And there's some polarizing opinions coming out saying it's going to drop down to 1,000 again, or it's going to quickly get up to 2,000. I'm actually seeing a lot more talk about it than Bitcoin at the moment, which, as we're demonstrating right here, Bitcoin's social dominance is still staying low. You know, we saw a few hints of it getting above that coveted 20% line that I like to look at as kind of a healthy amount of discourse for Bitcoin. When it goes above, that's when you see pretty clear recoveries. It doesn't have to be above for recoveries to happen, but it certainly helps. And during some of the biggest bull runs, which I'll show here, you can clearly see that it was consistently above 20% throughout, you know, the post-COVID period, all the way until, I guess we can say, right around the top. And it was going down right before this then all-time high in April. We had kind of that second leg up in the true all-time high in November, where it was still above. And look how it dropped. This is where everyone got greedy, right? In late October of 2021, 2 weeks before the all-time high. And whales were taking profit right at the same time when everyone started to talk about altcoins instead of Bitcoin. And that's when things dropped. So I still like to check in on this, much more of a long-term indicator than a short-term, as evidenced by the fact that we're looking at 3 years here. But I really like that as kind of a greed versus fear indicator for the markets. And it does still show that there's a little bit of greed and a little bit of buying the dip going on. We'd much rather people not even want to talk about buying the dip. And I'll show those social trends in just a moment. Before I do, we can see funding rates are pretty much neutral. I definitely should zoom in here because we're still looking at 3 years.
Yeah. Always, and because of this strong spikes, you will always be a little bit,
Exactly. So it's actually interesting. I do take it back now that we've zoomed in. I see that we started getting some shorts on Binance in particular, and it looks like BitMEX too, just today. And it's the first time they've even really been short altogether. We've had a few ones for just Binance or just BitMEX, but now all three of them, the Binance USDT, Binance Bitcoin, and BitMEX USDT, all are in the negative. The first time I've seen that happen, I think it's been over a month here. Yeah, none of these times it had all three, but regardless, it shows that there's some serious fear going on. So that's actually a good short-term sign if you're taking a chance in buying the dip, because shorts are starting to open up and people are expecting that because this drop happened, that means there's going to be more, and all of the party that was going on here is now over. So because there's that assumption, that means it's more likely for a party to actually come back, as counterintuitive as that sounds. And let's take a look, as I mentioned, that buy the dip chart, right? I had a couple of them. Here we go. So check it out. You see a little bit of buy the dip mention going on Twitter, Reddit, Discord, and Telegram, but it's nothing significant, you know? This one actually is a legitimate dip, but even on occurrences where there wasn't much of a legitimate dip, you see spikes that really aren't much smaller. You know, right here, this was the last time we really saw the same sized buy the dip spike that we're seeing now. And that actually sort of happened right at the beginning of a rally. But like these were huge spikes where there's way more talk of buying the dip, but there really wasn't even much of a dip going on. So I don't think there's much optimism right now. It kind of matches what we saw with the funding rate, where it's a lot of fear and people thinking this is the beginning of the inevitable downfall and Bitcoin may go back under 20K again. If people believe that, it's a good sign if you're staying patient right now. You want the crowd to not really want to buy the dip. If you see a big spike right here of buy the dip calls, that's a better sign that, or a worse sign that markets are going to continue dropping down. And you can see it's mostly Reddit saying that it's buy the dip time. This is their biggest call for buying the dip in the past 3 months. And I think there actually was a viral post on the r/cryptocurrency subreddit I saw as I was going to bed last night that probably contributed to this big spike. But Telegram, not really much, and Twitter, not really much at all. So that's interesting to see. Regarding another, overarching look at just discussion rates about crypto, it's continuing to go down. Not really much discussion about it, despite the big January rally. I'll go back 3 months instead of 1, so we can see that. It might actually, that could have been a mistake because sometimes it takes a while to load. But yeah, so we saw maybe a mild uptick in January, and then it started to go back down. One big spike right here as crypto was bottoming out and people were getting very fearful. And then, of course, they got faked out. Prices went up, but less and less discussions have been happening ever since. So I find that very interesting. You look at the various platforms, Telegram, they have picked up. They've started to get a bit chilly. Usually Telegram, when I see the overall social volume going up, it's almost a counter indicator because Telegram of these 3 platforms tends to be the most FOMO-ish or FUD-ish based on whatever the trend is. Reddit probably has the most educated takes of the 3. So their takes are more right when it comes to social volume going up. And then Twitter, they're kind of a blend, and they've been going down pretty substantially since mid-February, even with the big price rise and then the inevitable downfall. So interesting mixed bag there. Also in the news, we had a report about 7 hours ago saying $8.9 billion in customer funds are missing on FTX. This was already suspected, but now we actually have a value to it. People knew it would be large, but just about $9 billion missing is absolutely astonishing. But look, it didn't really make much of a dent compared to the huge spikes that were happening here, which, correct me if I'm wrong, chat, but I believe it was related to SBF and his bails and going, like, the actual claims that were coming out against him that were causing a lot of traffic. So even with that report, not a huge spike. And another social trend I'm looking at is this good, reliable one that I've gone over a few times over the past couple of weeks. It's the buy, buying, or bought. versus sell, selling, or sold mentions, where the gap between the two is kind of a key indicator on the overall sentiment. When there's a tight gap or red is even above blue, showing there's more sell calls than buy calls, that's a very good sign that a bottom is taking place and we could be on a good run. On the other end of the spectrum, when you see a big spike in buys while sell is staying pretty low, that's a sign that we might be going a little bit downwards. Right now, pretty neutral. I might even favor the buys over the sells a little bit, because you can see sell calls have really started to go down, but buys are, they're treading water at least. So the gap looks like it's growing a bit, and that's not great. I don't think the drop really made much of a difference here. It still looks like people are spamming buy calls a little more than sell calls compared to average. And we'll want that to change in order to have a good promising sign that prices are going to bounce. Obviously, the biggest one is what we already went over with the Bitcoin whales here, but there's a lot to uncover. And Maxim, while you're here, before I move on to some other charts,
Yes.
I'm curious what you think are some of the driving factors in whether we're going to quickly recover from that 5% drop, or whether it's going to continue to range or flush down more.
You mean from Bitcoin whales?
Yeah, exactly. It doesn't have to be whales, just any metrics that you're keeping an eye on at the moment.
Well, we need to put it into the context. De facto now, crypto is not correlated to stock market, and not in a good sense for crypto, where stock market trying to break new highs. Mm-hmm. Actively, European indices, also American, some of them. Crypto is trying to test, can I go lower? It's of course has specific informational background. So this attempt of some senators to fight against Silvergate, and Silvergate is a different story, connected but different story, but fighting against Binance, which looks like a revenge for what Binance supposedly did to FTX. So there is a fight against inside crypto still going on, and market is not as big as the total market, so it does react faster, which often is good on the way up, but it's the same on the way down. We're suppressed, not to underestimate it. And whales are obviously feeling it. I mean, they're the ones who feel it even more. It's different when you have 5,000 under management, when you have 500 millions. So you react sometimes when you have 500 millions in Bitcoin to the news even more and stronger than the crowd possible. And I think this is what we're seeing now. They're very cautious and probably they even have more information, even though normally in crypto, information leaks out fast just to move the market. So it's not that there is something hidden, but they are very cautious. They see risks. A price shows there is a risk. Normally we should be making new highs. Why not? And it's only because big holders see the risks. And if it changes and when it changes, wow. I hope so. The sooner we see the change in their behavior, it means they don't see much risk anymore. On the other side, the big holders are also like humans, or like humans running big organizations, MicroStrategy, or I don't know what, or some big funds. So they might be under impression that we have risks because of events happened to crypto in the last half a year, especially in intensive phase of last bear market. So they must be feeling the pain, and they keep their risk minimized in the sense that they think, okay, well, still unknown, will this revenge strike from FTX supporters destroy Binance? Looks unlikely at the moment, but you never know now. Yeah. So they might keep their exposure to Bitcoin, Ethereum lower, converting their holdings to at least partially to stables in attempt to buy the dips. So they expect the dips in the sense. which now when you think it in this way, it's a good sign. They will jump in. Yeah, they will jump in. So if in ideal world, we will see now a rapid decline to 1.2 in Ethereum and corresponding level in Bitcoin, maybe, I don't know, 18,000, and strong increase in their holding. Yeah, then it will tell the story we're talking about. They moved part of their holding to stables in expectation of some bad news coming, and they bought the real dip, and then we can keep growing. Mm-hmm. So that will be my ideal scenario. And if you, Nicole, or you personally, if you want to play safely, this is the safest bet. Wait for the new dip and see if whales are increasing. Well, you are together with them. They know what they're doing. They have enough money. A bit more risky. Okay, we can try to bet market will ignore, as market is doing quite often, fundamentally not so good environment, and just keep growing from here. Lower probability, but possible to win. Yeah. So this is I know it's a longer speech, but their behavior, it's obviously showing they're prepared for worse times. They already prepared for it, which is long term is a good sign. They have enough power. You saw in stablecoins, they increase their holdings.
Yeah, absolutely. And there's a lot of accumulating in stablecoins at the moment, other than USDC, which I think is a really interesting drop there. But going back to your first point you mentioned, which is the correlation. I do see some signs that there's some correlation breaks. If we zoom into like the last month here. So, take a look at this. We've got the plummet today, and then the S&P is actually up today. So whatever caused the, Bitcoin and Ethereum drop of 5% for Bitcoin. A lot of people are saying Binance. I've seen a little bit of Silvergate mentioned as well.
Both, true. It's,
yeah.
Partially Silvergate. Actually, even bigger, probably. It's even bigger is Silvergate. You're right, yeah. Mm-hmm.
Yeah. The question is, how much hold did Silvergate really have on this supply? They were certainly big, but enough to drop prices 5% in an instant, it's hard to say. So it could be a combination of both. But regardless, I kind of look at this as a good sign with the S&P going up today when, Bitcoin often, especially if it happens overnight in my area, when I wake up the next morning, it's usually followed with like a big downturn in the S&P too. And it was just Bitcoin sort of getting a head start with Asian markets or something. But that's not the case right now. And we've seen several instances over the past month where, Bitcoin is moving up and the S&P is staying flat, or Bitcoin is moving down. I can't find a good example here, but I know they're there. Bitcoin moving down and the S&P is staying flat, stuff like that. And I think that the S&P going back up today could actually be a very promising sign that Bitcoin may follow, maybe even toward the end of today, because Friday afternoons or your Saturday mornings, Max, when you're asleep, that's when a lot of big moves tend to happen, probably the most volume on average per week. I'd have to backtest this, but I know it's very close to the top as far as timing of the week goes. I think that this would be good, as we've said many times to you all. When there's no correlation at all between crypto and equities, that's when the bull runs tend to pop up most prominently. You don't want to have them correlating together, and you certainly don't want them to have opposing anti-correlations to each other. It's just no reliance whatsoever. That's the ideal scenario that allows prices to thrive when it's not government connected in crypto. Moving on to another asset really quick, wanted to point out that Wi-Fi is starting to get just absolutely huge on-chain transaction volume. This may not look like much, mostly because of this one spike, but if I just take out that one anomaly, take a look at some of the rising stuff going on, especially right here. This was a very good sign because it happened basically right after a dip as prices were starting to recover. Huge whale 1839 Wi-Fi were moved all at once, and that's
There is a story they're going into the liquid staking tool, and just because of long-term and committed community for iFi, also community of developers. If even it's not big, but still people are doing many strategies and everything on iFi, is that can have quite a substantial impact. And we can even watch the elective addresses and new addresses just to see if the growth there is as strong as the price. I would assume so, but let's see.
Oh yeah, huge rise right here. Yeah, just yesterday.
Yeah.
And network growth.
Yeah. You have nice choice of calls. I always was admiring your choice of calls.
You know, you got to have the color coordination, Maxim.
Yeah.
So network growth kind of stagnant. It doesn't look like it's anything special, at least for now. But you know, this was a big rise here yesterday. It's just not quite as big as the one that happened in February.
It probably means those who, it's in a sense, it's a good. Those who joined recently in the beginning, or let's say actually closer to the end of February, they're still active. So that this volumes and activity is done without attracting as many as it was back then new addresses. So all addresses are kind of user retention. And if you joined 2 weeks ago, and then you see another pump, you will get very excited, and you can attract some other users. We just need to track the elective addresses. It will start diverging at some point of time. We know it from experience. From transaction volume, we seem to be already entering this phase. So nothing grows forever. So we will see end of this process eventually. And actually, we ourselves have exposure, even not the biggest, but some exposure to iFi with our treasury. Team treasuries. So I'm watching it too. I'm watching it closely for the signs of divergency of the moment we see the elective addresses start falling down and social hype still high. Yeah, we might think of leaving it. Hopefully, I will not miss this point. But
yeah,
iFi is a cool. Yeah, entering the hype of Shanghai fork, liquid staking at the right time. No, well done.
So this was a Sandsheets model I made maybe a year and a half ago, and it actually calculates when there are big anomaly spikes, and that's how I saw this Wi-Fi spike pop up. If you're a Sandbase Pro member, of course, check out our top transactions model, and you can see this for yourself. I want to expand the assets sometime in the near future, but according to this, I mean, that move was about $14.3 million, so certainly pretty massive. And you can see some of the other recent huge transactions. This one was some sort of weird anomaly, so ignore that. But I see that, Aave, big $19 million move recently. Chainlink, if you go back to a couple weeks ago, over 100 million. And then Decentraland, 170 million that same day. So it's interesting, the 20th here had some of the biggest transactions. And if we look at Bitcoin's overall price around the 20th, this was right when prices were peaking. And it wasn't just Bitcoin's price that went down, all of altcoins went down right around here. So it's almost a certainty that these were big profit takes by whales following the big run that occurred in kind of the middle part of February. So I think that's interesting too. And you can kind of look at these as reversal indicators. When you see a bunch of huge spikes in major transactions when prices are going up, very good sign that we're about to see a bit of a retrace. On the opposing end, if prices are dropping, like if we monitor this throughout the day, and we'll put out a few posts if we see some big transactions, if we see a bunch of big moves now after prices have dropped, let's say Maker has another huge transaction, it could be a bunch of people who were waiting for the Maker dip who finally decided to act on it. And if we suddenly see like a $60 million Maker transaction, that's an increased probability of Maker seeing a big bounce after this dip happened. So it's just kind of a cool way to look at the markets for a lot of different altcoins. And speaking of altcoins, now that we've seen that drop, take a look at how the opportunity versus danger zone is looking for MVRVs here, you can see that it's semi-underbought for things like Decentraland. Of course, it always loves to do a refresh. I don't know what it is about this particular model, but it always likes to refresh while I'm showing it. In short, most assets are either neutral or semi-underbought now, showing that there's a bit of an opportunity. Wi-Fi, of course, was an exception because it's been on a huge run, even in spite of this drop. But the model is confirming that we had a big enough drop that it's created some buy the dip opportunities if you are a believer in MVRV and want to take a chance on maybe at least some short-term gains, because most of the MVRV opportunities are being created by the short-term MVRV. The long-term, like 2-3 month, for example, that's still looking a little overheated because January was such a great month, and most of February was a great month as well. So something to keep in mind there. In terms of overall circulation for the top asset, and we'll look at Ethereum too, still struggling. You can see that this is the 8th month, at least the first couple days of March. It's showing that it's still not getting enough unique tokens moving to justify the market cap being where it's at. So this model is leaning toward long-term prices still moving down unless we can get unique tokens to start circulating the way they were back in 2021 and even 2020. On the Ethereum side, kind of the same thing. This is the 4th month where it's a bearish divergence. It's interesting because it kind of alternated between very bullish and very bearish throughout 2022, and now it's just bearish month after month. So it's something to keep in mind and be a little careful about until we start seeing that there's enough activity on the network and utility to justify prices doing what it did here during this long green stretch. Whale transactions in general, yeah, we are seeing quite a bit of whale activity compared to the norm. I like to look at the small numbers in particular because it's looking at like a day and a half as opposed to these big bars, which are just 4-hour bars. Maker seeing a huge amount of whale activity, which makes sense because it's been one of the best performing assets. It's in the top 1% over the past week. We also see that Matic is getting a lot of whale activity. Wi-Fi, which we just talked about. Cardano, interestingly, I know we have a lot of Cardanos who watch our show. Ethereum is seeing some whale activity as well. So these are some big assets that already have a lot of fanfare that are seeing some increased whale activity at the moment right now. And we already mentioned funding rates, but just to illustrate it, it's kind of a mixed bag right now. These red bars are positive funding rates. So if you're in Dent, for example, Dent is seeing a huge amount of longs. It might be best to stay away until that cools down. On the other end, Axie Infinity is seeing a huge amount of shorting going on. So there's an increased argument that it can go up compared to other assets in the near future if those shorts get liquidated. And now why don't we look at the on-chain metrics for Bitcoin and prepare for some questions here in a few minutes. We'll also do Ethereum as well, as promised. So volume and transaction volume, nothing special for Bitcoin. At least for now, this big dip hasn't really changed anything. And there isn't a sudden increase like this huge dip that happened during the FTX collapse. You know, that would be a sign that a lot is happening, and you actually don't want to see volume increasing as prices are dipping. Unlike other indicators, you'd rather see volume drying up as a price drop happens, kind of like this one, right, where there wasn't as much volume during this dip because traders weren't interested in trading into that trend. So basically, if volume is drying up, the price direction will look to change to try and find a way to get volume to pick up again. And that's exactly what happened until it peaked here just a couple days after it was drying up. So for now, it's staying neutral. Nothing much to say there. Daily active addresses. staying flat, nothing special going on. You know, arguably a bit of a spike here. This was 1.08 million on March 1st, and that was right when it topped. We are seeing that a lot of daily active address spikes are happening right at the top, just like on February 15th and 16th. You can see circulation, though, still very low, which matches the NVT model that we just saw. MVRV, now that prices have dropped, we're back in negative territory for the 30-day and the 365-day MVRVs. When both are below zero, that gives a good probability increase that prices can rise. That said, neither are in serious danger right now. The 30-day MVRV actually, believe it or not, is at its lowest point of the year since late November. So since 2023 began, Bitcoin has mostly been in positive territory, took a slight dip here, which was a great time to buy, went into positive here, not serious positive, but enough to start getting concerned. And now it's back in negative territory, meaning there's an increased probability that things will rise based on average trading returns being in the negative, and you have an opportunity to buy into other traders' pain. Typically, though, you want to see, you know, something like right about here for Bitcoin. When it gets below 15%, that's an extreme bottom indicator. When it gets above positive 15%, like right about there, that's an extreme danger area where you want to start taking profit if it goes above that. So we're kind of in the middle of that range for now. For altcoins, you want to adjust that down to maybe 20% on each side instead of 15 because of the increased volatility you'll see. But at least for Bitcoin, the one that is controlling whether other assets can thrive or dive, it's looking like a better opportunity than a risk at the moment. Whale transactions, not much for Bitcoin. We saw a lot more for Ethereum. We already touched on, I guess we can break it down by tier really quick for Bitcoin. 10 to 100, still moving down slightly. 100 to 1,000, flat at the moment. And 1,000 to 10,000, that's the real concern here. These are the largest actual active whale addresses, and they are continuing to sink for now, with only about 23.6% held when it was at about 25.85% back in September. Ratio of transactions, understandably, it's pretty low now. That's a good sign. I'll switch to that model really quick. Just checking to see if there's anything else here. Yeah, weighted sentiment, super negative, Maxim. I think this is interesting as well. I'm not as confident in weighted sentiment as an indicator as I used to be, but I still think it's telling that a lot of negative commentary is popping up that is showing on our algorithm that people are beginning to be fearful. That's a good short-term indicator that prices can recover.
Mm-hmm. Yeah. It's if it stays a bit longer like this, good.
Absolutely. And then, yeah, as I mentioned, this ratio of transaction volume and profit to loss model that I have, Bitcoin, very negative. So sitting at, it basically means that there's about 30 to 40% more transactions happening at a loss than there are transactions happening at a profit right now for Bitcoin. And Ethereum as well, not quite as many loss transactions happening. Maybe they're more prone to be holding. And also Ethereum's recovered a little more than Bitcoin, so that makes sense as well. But yeah, right now, as it stands, if this holds up, this would be the lowest ratio. Let's go back a year. Oh yeah, it's even longer since it's been this low. I mean, it's a short sample size for now, and I guarantee it's going to probably move up a little bit unless there's a cataclysmic, Black Thursday kind of drop. But for now, the ratio of losses happening is at one of its lowest moments in time. And it's likely going to improve, as I said. But historically, when the ratio gets this low, it's a good sign that you're going to see some rebound, because this will usually hover around 0% given enough time elapsing. So good signs actually that both Bitcoin and Ethereum are seeing seriously negative ratios in volume and profit versus loss right now. Let's move back to Ethereum really quick. I want to look at a few on-chain metrics there, and then we'll take some questions. So trading volume, it has picked up a little bit. This is the highest amount of trading volume since the 17th. So we're at a little over a 2-week high in trading volume. That's a decent sign. If we zoom in a little bit, let's go to like the last week and just look at volume in like an hourly perspective instead. Yeah, so it's interestingly, once prices recovered or started to recover, that's when trading volume started to pick up. So that can be considered a good sign, as interest is pointing to traders being increasingly interested when prices rise as opposed to when it falls. Circulation still down, makes sense. That's what the NVT model said as well. Let's go back 3 months. Funding rate slightly short right now, so that's a good sign. Whale transactions. So the model said there's a bit of a pickup. I'm not seeing much here. If we get super granular, look at 4 hours at a time. Okay, that's why. So there was this big spike here that it picked up. And it does look like that it happened right after the drop happened. So there were some Ethereum opportunists who have some big money, over $100,000, for 1,034 whale transactions suddenly appeared on the network right after the drop. So that's a good sign, and that could be having something to do with why Ethereum is recovering a bit better than Bitcoin right now. We already went over the tier supply, so we'll leave that alone. We touched on the ratio of loss versus profit being low at the moment, which is good. Still not really any sort of dormant movement, so still concerning that Ethereum that's been sitting for a while is continuing to just sit and collect dust. The supply in exchanges has gotten very low, so it's down. It actually briefly went below 11%. This was the first time that's happened in quite a while. Yeah, since about May of 2018, that's the last time that we saw the supply in exchanges below 11%. More a good thing than a bad thing. Nothing much happening with social dominance. Ethereum's a bit under the radar, not seeing a ton of big spikes in discussion rate. Development activity is continuing to churn along. Let's look at the development activity metric really quick. And while I do that, maybe Balresh, if you can see what asset requests we have, we can jump to them in just a moment. So development activity, just a moment to load. We continue to see a lot of the usual suspects. Polkadot, Kusama, and Cardano have been the top 3 for quite some time. Internet computer. Ethereum's actually up to number 5 over the past 30 days. I recall last time I checked, about a week ago, it was around 8 or 9. So Ethereum is actually starting to see a significant increase compared to the crowd, with almost 400 submissions per day over the past 30 days. That's definitely well above its average. Status right below it, Vega. Cosmos has re-entered the top 10. Decentraland tends to go in and out of the top 10. And Filecoin's actually down a bit of a peg, but still over 300 GitHub submissions a day. These are actual notable GitHub submissions. That's a very good sign as well. Hedera, interestingly, at number 11. I don't usually see it this high. Chainlink, IOTA, Aptos getting a ton of development activity. I'm curious, Maxim, do you have any opinions about Aptos? I know it's been in the news here and there the last few months.
Unfortunately, I don't or did not. Okay. Maybe I will have time to understand.
I'm in the same boat. I'd love to learn more about Aptos, so perhaps we can do some collaborative insight about it in the near future, because it obviously went on a big run in January. much more than the rest of the markets. So a lot of people are starting to pay attention to it.
Yeah.
Flow is up there. Solana, interestingly, at number 16. Lido and Lido staked Ethereum. They share the same GitHub. Makes sense. Audius and Aragon round out the top 20. So we'll leave it there. And just remember that assets that are showing high development activity like this, it doesn't guarantee that prices are going to go up just because they're one of the leaders. However, it does tend to disprove any concerns that it's a rug pull type of project. It means that they actually have a coding team that's genuinely working to improve the asset and innovate and make it more useful for the current blockchain technology demands that are out there right now. So not a bad idea if your portfolio has some or a little bit of all of these kinds of assets. Not investment advice, it's your decision to make. But we do believe in this development activity metric here at Santiment. All right, so with that said, Balresh, do you see a few assets we might be able to dive into?
We do not have any asset requests as of now.
No worries, no worries. We have some that we can look at ourselves. I know I wanted to look at Maker for a while. What do you think about that, Maksim?
Yeah, just about right.
Maker has definitely been a popular one here over the past month or so, especially just the past week, because it's had an actual positive return when most assets did not. Let's look at the last 3 months for Maker. Clearly a nice rise in transaction volume and trading volume. It looks like it really was peaking right here on the last day of February. Had a slight retrace, and then I think that's a higher high. So if I zoom in here really quick, we could take a really tight look. March 1st got up to $944.75. No, it's not quite a higher high. It actually fell just short of making a higher high. So that's a bummer. If it actually went above, if you're a TA trader, higher highs are generally a very good sign that it's going to continue moving in an uptrend pace. But if that rebound stayed right below the last high, it can mean that it's showing some signs of topping out. Daily active addresses, there was a huge spike right at the top. That's pretty typical. Circulation, if we look at the trend, yeah, it's moving up in the right direction. There's about 9,175 Maker that are being moved per day. Back on New Year's Day, it was way down at 5170. So it has been rising pretty substantially here. So good sign there that utility is picking up for sure.
Could you check min dollar invested age?
Absolutely. Let's go down there.
Just want to see if next day redistribution started. Yeah, slightly. Yeah. Okay.
That's a good sign.
Need to see a bit more. Yeah, would be nice.
Look at the last year for context. Yeah, Makers, it doesn't distribute very often. This is pretty significant in my opinion, Maksim. It's a good suggestion because we see that over the last 3 days, it's moved down maybe 3 days on average. And the last time it really did that was way back in June. I guess I take it back. There was one anomaly here in mid-November, but like they're few and far between when these blips happen in Maker. And I would view that as a positive sign.
Yeah, early positive sign, yeah.
Network realized profit loss, as it makes sense with the price going up here compared to the rest of the markets. We are seeing some realized profits going on, about 3 million on March 1st. And that was really the biggest we saw since October of last year. And that did get followed by a big drop. So this realized profit spike is a bit concerning. We would rather not be seeing all of these realized profits going on right now.
It's good, no worries. It means it probably correlated to min dollar invested age redistribution for those who hold long enough to be in profits.
That's a good point.
Or maybe recently. So they don't believe in the further growth, which is okay. It will be, in my experience, it's more concerning if you see continued price increase and suddenly quiet on in the area of profit taken, then not good. It would mean people say, okay, why do I sell now? I sell later for the profit. Well, you know, this later never comes. So what you see taking profit is good, is healthy. I mean, someone need to redistribute to us. There is another extreme. If people sell in massive losses just to get rid of it, it's also a good sign. So both of them are fine.
Yeah, fair enough. And we can also see that supply and exchanges is starting to really rise here as well. It's been going up since pretty much the beginning of the year, even the last couple days of December. So it was sitting about 7.4% in late December, and now it's up to 8.9%. Pretty substantial rise there. Maybe something to do with staking, Maxim, and moving away from staking and taking profit, perhaps?
Could be if people decided to go out of the governments, but we need a bit more of detailed analysis where this increase of exchange flow, from which addresses is it coming from? Cannot say it from immediately.
That is true. Weighted sentiment, interesting that we have this big negative spike. It's a short sample size though. These are weekly bars, so at least for the first day or two of this new week, suddenly a lot of negativity toward Maker despite its big rise, which is very unusual. That usually is not the case when an asset is decoupling from the rest of the markets. Development activity looks fine, nothing special there. Just checking if we missed anything here in the middle. Oh yeah, let's look at the whale tiers really quick, see if there's something going on. So Maker's priced at just under $1,000 now. Why don't we look at maybe the 10 to 100, 100 to 1,000, and 1,000 to 10,000. Looks like it's kind of a mixed bag. So the 10 to 100, they don't hold a substantial amount of Maker. They only have about 3.25%, but they had been on a pretty good run since November. I think that this one might be the most important. Since the 27th, the 100 to 1,000 tier, they've added about 8.34% to their bags. That's a big jump. Let's add price to it just to see what kind of correlation there is with that tier. So yeah, price did start to jump right when the red line went up here. Just sort of isolate it really quick. Yeah, I mean, it looks like as prices went down, so did this line in particular. And then they started to really recover here right around the FTX collapse, right before it. I guess like right here, November 24th, up until now, if I just highlight this point, prices are up about 43% since the red line started accumulating. So I think that's probably the one to watch here, folks. It does have some alpha to it. We can always combine these three tiers as well. Get rid of this.
Well, you don't need to take the biggest one because biggest is really big. Remember, Maker is not a cheap coin, yeah?
It's true. It's true. 1,000 times 1,000, you're talking about millionaires at that point. So
yes,
yeah, this is basically 100,000 heirs down to 10,000 heirs. And if we just combine these two, yeah, I mean, it's definitely moving in the right direction. I think this is a good sign for Maker. They're holding about 13.1% of the supply. They were up to 14.1. So yeah, I like the look of that. Ratio
and just look how they changed their attitude before, actually quite before, like a few weeks before, even 1 month before the price start pulling up again. They were declining if you increase this window. Yeah, they were declining all the whole last year, and then in November they changed corrected down, but then doubled down on the accumulation, and eventually price followed. It seems to be indeed a midterm very good group of holders to follow.
Yeah, I agree.
They seem to be knowing, or most likely because they're big holders, they follow on internal events in Maker, which are complex by the nature. Maker is now became quite complex. It's all the initiatives and DAO and the Maker DAO making crazy assumptions for some very reasonable assumptions. So it's people who having a lot of money invested, they probably have a reason to follow them. So, and we, if we follow for their behavior, we'll be doing good enough.
Mm-hmm. Yeah. And we also had an article that went out just a couple days ago when Maker was in kind of the midst of its run. This is from one of our big community members who puts out great articles once or twice a week. He focused on the supply and exchanges for Maker. And obviously we just went over that and discussed it, but he saw the same thing. And he mentioned that 8.63% of the token supply is housed on crypto exchanges compared to 7% in December. Generally, when the supply on exchanges is growing, it means there's more of that asset being held by exchanges and is available for trading. Happens when more investors are interested in selling. So generally, when supply is rising, it can be a concern of a future sell-off. So it's just something to keep in mind. Maker's value increased by 75%. Year to date, it might even be up around 80 because it went up just a little more in the last couple of days. I'm sure it kind of got dinged by the correction that we just saw with all of markets, though. And then also the MVRV is very important too. I believe this is the 1 year MVRV. Oh, you know what? I put a post out because I gave an updated version of that. Check this out. So traders who've invested in Maker over the past year are finally above water. Our latest community insight looks at 13 increase. But yeah, you can see that they were very temporarily at about plus 10%. That might actually be closer to break even now. Let's find out really fast. All right, so MVRV. No, it's still positive, still very positive. And I was wrong. Maker hasn't really gotten hit at all. They fully recovered after the drop about 10 hours ago. And they're back up at about $939. The 365-day MVRV has actually increased and is now up to plus 13%. So more signs of a potential top happening, if anything. Could be very short term, though. So don't overreact to this. But yeah, I think that's all for Maker. Maybe we could do one more. Maxim, do you have any assets you want to take a quick look at?
No, sometimes it's good to stick to major story, which is now whales, Bitcoin, Ethereum accumulating their power to buy lower. It's kind of obvious after talking today and analyzing the data. Maker is doing well, and to my eye, it actually has a good story behind, which is not so obvious to the public yet. In the form of all these attacks, regulatorily and also market attacks on stable coins, Binance USD, USDC, you name it, actually everyone. DAI is still the only one you cannot really attack it survived two bear markets. One was a kind of bit painful for some vault holders. Still, the peg survived. And from regulatory point of view, now you cannot really attack DAI. It's indeed quite decentralized and very cool technology. And if anyone wants to attack Maker and DAI, first they will do easy game with all other centralized coins. So this story narrative should play, and it plays perfectly in a bear market. and I'm expecting it to come out eventually. The moment we see, I will become quite concerned for the purpose of okay, what is left else? Maybe it's time to leave. And what we saw that this sizable group of holders, they were, even though volatile, but on average they're increasing their holding, good sign. And some of them are selling and the profit is also very good. So they're kind of nervous. You see it like increasing, decreasing, increasing, generally increasing, but quite volatile, and nervous enough to realize profits. So I stick to it. I stick to it for a moment. And IFI, it doesn't matter if IFI or Lido or any liquid stock. Actually, you need to look into details, maybe even analyze how you rotate your money and get ready for Bitcoin and Ethereum. They will come back the moment Wells decided, okay, now it's the time, either after a small crash to 1-2 in Ethereum, or they can change their mind anytime. They say, okay, whatever, this FAT didn't work out. Silvergate wasn't so dangerous. We are buying from the current level, and then it will push up very fast. So we need to observe these whales in Bitcoin Ethereum, our usual group. So, and that's it. This is the story. And you always invest in crypto following the story or expecting how the story develops. Otherwise, if we go into too much details, we will lose the forest behind the trees, which you better don't do in crypto. You need to follow the story. So we can close it on this level. It's fine, in my opinion.
Yeah, absolutely. We'll have some more stories that we'll post here today and tomorrow. I'll probably have a few over the weekend. But yeah, Maksim, thanks as always for joining. It's a pleasure hearing your perspective on the markets. If you guys have follow-up questions, feel free to just ping us right on our Discord server. Find it right on our Twitter. If you don't have our current Discord link, just look at our link tree. It's right there. Leave comments on our videos as well and drop a like. You know, I know it's cliche and everyone asks for them, but those likes actually make a difference in our videos getting more exposure, and we wouldn't be here without you. So Thank you to everyone for joining, and hope you all have a great weekend. Max and Maksim, thank you for joining me today as well.
Thanks, Brian, for running it without
Always.
breaks for so long time. Yeah. Enjoy your weekend too, yeah.
Enjoy. I'll talk to everyone soon. Take care.
Take care. Bye-bye.